Hello, this video from CalculationCrunchers.com will follow the quick setup of a typical mortgage loan using Mortgage Maker Lite. Mortgage Maker Lite acts as a loan origination program designed for mortgage loan officers. Mortgage Maker Lite is a trimmed down version of Mortgage Maker Pro in that it does not include the charts or the self-populating Fannie Mae Freddie Mac mortgage documents that are included in Mortgage Maker Pro. Looking at the actual program, you can see that across the bottom of the screen here we have our navigation tabs. The navigation tabs allow you quick, easy access to all areas of the program. You may have also noticed that we're currently on the welcome screen. The welcome screen gives you your typical welcome information here, your licensee name, and below that your license agreement and license for use of the program, followed by your instructions and instructions for use. Moving on from there, the next tab over is the deal worker screen. This is the setup area where you would come to set up a new mortgage loan. In the upper left area, you would enter your borrower's current mortgages, mark which ones need to be paid off with the loan that you're setting up, which ones need to be excluded. Below that, the credit debts, which ones again need to be paid, and which ones need to be excluded from the debt ratio. In the upper right is your new loan information. You'd put in your loan amount, your rate, the term. Right now I've got it set up as a fixed rate loan. If I decided to switch that, I can change it to a 1 year, a 2 year, a 3 year, 5, 7, or 10-year ARM, or I can select a negative amortization loan for my option ARM. Below that, I have the option of changing it to an interest-only loan. If I choose yes for an interest-only loan, the interest-only area lights up or opens up, and I can put in, say, 60 months if I want it to be an interest-only period of 60 months before it converts to a regular loan. For this example, I'll keep it as a straight loan, not interest only. Moving on down below this, I have the property value right there, the current the current income for the household, the tax effective interest rate depending on what tax bracket the customer falls into. My customer told me that they fell under the 33% tax bracket, which gives them a tax effective interest rate of 5.3533%. Below that is your blended interest rate area. If you're setting up a second mortgage and your borrower currently has a first mortgage, you can plug in the information from their first mortgage right here, and this program will give you a true blended interest rate, not only a weighted average rate, but also a true blended interest rate. And below that you see your ARM detail information area. It is currently grayed out. It's grayed out because it hasn't been selected as an ARM. If I decide to go up here and make this a 3-year ARM, come down here and the ARM area has opened up. I can put in my margin, index, floor rate, max rate, everything I need to do to set up an ARM loan. And then also the first payment adjustment dates, as well as the best and worst case scenarios for those payments at those adjustments will automatically self-calculate and populate right here. If you want to see beyond the first and second rate changes, you can flip over to the amortization schedule and you can follow the loan all the way through its term and take a look at those changes. And below this area is the option ARM area. If I come up here and switch this back to, let's switch it to a negative AM loan. Down at the bottom, I can put in my option ARM information as needed. And again, just like the ARM area, the first few payments will show up, loan balance as well. And if I need more than that, I can run down to the amortization schedule to get a better look at that. And moving down below that is all my qualifying figures. I have loan to value, debt ratio, monthly disposable income. I can choose which monthly payment I want the debt ratio to be qualifying from. For example, if I put in a negative AM loan, an option ARM, I may need to qualify the debt ratio on the fully indexed, fully amortized month 1 payment. Or I might need to use the fully indexed interest only month 1 payment, depending on which program I'm using. Or I can go with month 13, month 25, month 37. There's several different choices here, so you can make sure that you're qualifying your borrower off of the correct monthly payment according to your program. Also, we have APR, Section 32 tests, pretty much everything you should need to make sure that your borrower qualifies for the loan that you're trying to put them into. And then moving beyond this screen, we can go to the closing costs area. The closing costs area is set up very similar to a typical HUD-1 statement. HUD-1 settlement statement. Put in your fees as you need. Put in your interest only, your day's interest, everything you should need, as well as over here on the right, you can mark which fees need to affect your APR. And over here on the left, you can mark if there are certain fees that are going to be paid outside of closing by the borrower, by the lender. Choose the correct designation here depending on the legend key below. Also, there's a Section 32 test on this sheet as well. and your cash out to borrower and several other figures that were showing up on the deal worker screen also show up here, so you don't need to flip back and forth between screens. Moving from here, we go to the presentation sheet. The presentation sheet self-calculates fully, and it points out several key points to the customer about this loan. This sheet itself has been responsible for several sold loans over the years. This sheet has been very well received by current Mortgage Maker customers by their borrowers. Moving beyond this, we can get to the amortization schedule. The amortization schedule allows for extra payments to be entered as well on different months. You can put in different amounts. You can put in $50 one month. A few months later, you can put in $150, and a few months later, you can put in $3,000. Put in the payments as you need, and the summary of the payoff will be shown up here with the payments I just put in. Shows that this loan has now been cut down to 29.08 years with a payoff date of 3/1/2037. When I take those extra payments back out, the loan is a 30-year loan with a payoff date of February 1st, 2038. And then going beyond the amortization schedule, we have the loan comparison sheet. Loan comparison sheet allows you to put up to 10 different loan scenarios on one sheet of paper in case you think your borrower is not seated perfectly in their loan, or if maybe they're not feeling as comfortable as you'd like them to feel with it. You can put different scenarios on this sheet. Send the sheet to the customer, allow them to look at it in the privacy of their own home, and they can select which plan or which program seems to be the right one for them. That concludes this demonstration of the Mortgage Maker Lite loan origination software. If you feel that you need this program with other additional features such as self-populating Fannie Mae Freddie Mac documents and other features as well, please come to calculationcrunchers.com for more info and take a look at Mortgage Maker Pro, the upgraded version of this program, and for other great programs. Thank you for watching, and good luck in your mortgage career.